Thank you, everyone. And lovely to see you guys take your lunchtime to join this very, very anticipated events, because we have two young CPAs. They join us to take their time from really, really busy tax season to help us to share their knowledge and their tips for somebody just starting business, and what is some, like a potholes you don't want to step into. So we're 100% appreciated for their time. So now I'd like to tell you a little bit about Vision to Reality Foundation. This foundation incorporated in fall 2021, so only a year and a half. And right now we have 220 members join our online community. So it is a 100% online supporting group to the newcomers come to BC who likes to start their own business. And we're connecting them with the local professionals, local business owners, and also the newcomers, so they can get to know each other and learn from each other. We're running 2 programs each month. One is the workshop like this one, and another one we're already scheduled for end of this month, which is a local young business owner share how he started his business. What is the pros and cons of owning a business? So that's called a storytelling. We also have a mentorship program. We're just starting right now, about the 2nd week or the 3rd week of our mentorship program. And we connecting the people, they wanted to get some industry professionals, or maybe they just wanted to get a job in a certain career path, and they needed somebody to show them what is that career all about. Or just the young people in the university, they wanted to learn something. So this is our goal for our programs. But welcome everybody to join our online community so you can learn from others.
Thank you, Winnie, very much for the introduction. So today we will be kind of formatting our presentation in terms of common tax and accounting questions we get asked, and we'll gear this a little bit more specifically to new business owners. Before we get into our introductions, I do just want to do a quick disclaimer. This presentation, it is for information purposes only. Accounting and tax, it is a very complex topic, and it really does vary case to case. So, if you do have any questions specific to your situation, make sure you're reaching out to, myself, Nav, or your professional before acting on any of the info that you hear in this presentation today. And we just wanted to do a quick thank you to Vision to Reality Foundation. We're really excited to be able to come on and share our expertise and just get to know everybody in the community a little bit better. And again, we're always happy to chat with new people and, answer some of those high level questions that they might have. So starting with our introductions. So my name is Kyle Petty. I'm a CPA manager at our MNP Port Moody office. I'm in our assurance services group. So essentially what that means is I work with owner operated businesses, primarily mid-sized businesses in the Lower Mainland at BC. We provide GST tax return filing, we provide personal tax returns work, we do corporate tax, we do tax planning, compensation planning for business owners. We help with estate planning, really full cycle. Help for our owner operated business is really our bread and butter. And I will hand it over to Nav to kind of do her intro before we continue on.
Thanks, Kyle. And thanks everyone for joining. I know it's lunchtime, so appreciate you taking the time. My name is Nav, or Navdeep Dougal, and I work out of our Port Moody office here. I've been with MNP for almost 9 years now, and my main focus, sort of niche, is working in the professional services group, meaning I work with a lot of dentists and lawyers and that sort of segment, but I also work with a lot of small to medium business owners in that mid-market, as Kyle mentioned. So I'm a mom. I have 2 kids. I have a background in science before I joined as an accountant and got my designation as a CA at the time and now a CPA. So I'm just excited to share what we have in our presentation with you all today. And if you have any questions at the end, feel free to reach out to either myself or Kyle.
And I can't one up Nav's parent thing, but I am a dog dad, so I just want to add that in just to clarify. All right, Nav. Yep.
Yeah,
sorry, go ahead.
Sure. Yeah, no problem. And as Kyle's previously mentioned, MNP is it's a national firm, and we have a suite of services that we're able to offer to individuals or corporate clients, and they're not limited to this list by any means. Personal tax returns, you've probably heard the term T1. That's what a personal return is. T2, corporate tax returns, GST, PST filings, tax planning, estate planning, engagements. So the compilation, review, and audit engagement is just a term used for financial statements that are prepared for a company. Depending on the level of what's called assurance required, you would engage your accountant to prepare the respective engagement. And again, MNP is a national firm. Even though Port Moody is a small office, our office has about 30 staff and 4 partners. We do have the resources of a large national firm, and if you check our website at mnp.ca, you can see what other offers we have.
Totally. And just to reiterate what Nav said, is a lot of the feedback we get from clients is, MNP, our Port Moody office is a smaller office, but our clients really enjoy being able to have a one-stop shop, at whatever stage their business is at, whether it's starting out or you're at the point where you're looking to potentially retire, and succession planning. So as Nav said, there's lots of details on mnp.ca on different services that MNP offers.
So today we're going to sort of walk through top 6 accounting tax related questions we get from individuals looking to start a business who are just at the beginning of a business. So we'll just sort of walk through these questions. And if you have any other questions that come up along the way in our presentation, feel free to just raise your hand or type in the chat box, and we'd be happy to answer those. So the questions that we're going to cover today are, what are my tax filing obligations as an individual? So in this case, it's more geared towards a sole proprietor where you're not incorporated. Things to consider when going into business. What are some common business structures that we see? When should I incorporate? What should I know about record keeping? And what professionals do I need on my team?
So I will start off by talking about our tax filing obligations as an individual. So all individual taxpayers in Canada are required to file a personal income tax return. So that means even if you don't have any taxable income, you still want to make sure you're getting your T1 personal tax return completed each year. These returns are all done on a calendar year basis. So we will talk about, corporate tax year ends and how those differ from personal. But when we're talking about personal taxes, it's calendar year, so January to December. Our T1 filing deadline for this year, so historically it falls on April 30th. This year, again, we've got this date circled in our calendar. It falls on a Sunday, so we get until May 1st, 2023 this year to get your T1 personal tax filing completed. If you do have a business and are reporting business income, you do get a little bit of an extension, but we generally try to get everything filed by that April 30th, just to make sure that if there's any taxes owing, those balances can be paid in advance of the deadline. So talking about business income, this is reported on your Schedule 2125 for self-employed individuals. So if you do have business income, that's where you'd see that be reported to CRA if you're operating as a sole proprietor. And we will get into a little bit further in the presentation, the different structures. So we'll kind of circle back to that schedule later on in our presentation as well. So just looking at personal tax returns, very high level. So tax deductions are amounts that reduce your taxable income, whereas tax credits are applied to the tax balance owing. So certain expenses or deductions that you would see would be RSP contributions, professional dues, liability insurance, moving expenses, childcare expenses, spousal support, costs that you've incurred to complete your job. So if your employer requires you to work from home, that might be something that you can deduct on your return as well. So at the end of the day, the CRA will determine your taxable income based on the total income received less the deductions. And then at the end of the day, any amounts that you've paid less the tax credits will be either your refund owing or your tax balance due. So circling back to the self-employment expense schedule, so that's 2125. We just wanted to talk about some of the expenses that you can claim on that schedule. Now, I think a lot of times what people, a misconception they have when they come and talk to us is that to be able to gain access to deductions, you're required to be an incorporated business. Now, that isn't the case. If you are operating as a sole proprietor, you still have access to those deductions or write-offs as they're commonly referred to. Some of those popular categories would be insurance, marketing, advertisement, supplies, home office, automobile. The general rule of thumb and what CRA is looking for, if they're ever looking at these expenses, is they want to be able to, for you to support how the expense relates to earning business income. So a common example that we see is if you're driving your car to go and visit clients on site, it's easy to justify how that relates to earning your income. Whereas if you're driving up to the interior for a family vacation, can't really substantiate how that would relate to earning business income. So next, we're going to look at the combined tax rates in BC. So these tax rates are specifically for employment income and business income. Things like dividends and capital gains are calculated differently. So we're just specifically looking at those two types of income. So looking at this table here, you can see as you start to increase in terms of what your taxable income would be. So when you get over that $100,000 threshold, you can see that the tax rate really starts to creep up. And just pointing out one of these line items that we'll talk about a few times in our presentation is income over 227,000 is taxed at a rate of 53.5%. So oftentimes when we're having conversations with our clients referring to this chart, what we'll basically tell them is that if your taxable income is at 227,000, for every dollar that you make above that number, you're paying 53.5% tax on that number. So at the end of the day, what you'd be taking back for every dollar is 46 cents on the dollar after taxes are factored in. So when we talk about structures of business, we'll kind of circle back to this number and we'll talk about how there could be structures that could more benefit you in situations where you're earning lots of income.
So things to consider when going into business. Some of the things that we do get asked often is, do I need to register my business? So that sort of relates to registering your business with the CRA and getting a CRA business number. If you are not incorporated yet, and you're working as a sole proprietor, the main reasons to register would be if you're required to get a GST account, if you're paying any staff, if you need a payroll number, and then of course if you're incorporated, you're going to have a corporate. You'll be registered with the CRA as well. Reasons for getting a GST or requirements for having to be registered for GST is when your gross revenues or earnings from your self-employed income or the corporate earnings are over 30,000. So what that means is anytime, now that you've exceeded that threshold, anytime you make a sale to a customer or a client, you have to collect 5% GST on the services provided. And basically you're holding that money in trust for the government until you need to remit it. And the remittance, it could be quarterly, it could be monthly, it could be annually, depending on how you're registered with the government. And then to offset that amount payable to the government, any costs you incur, such as the automobile costs Kyle mentioned, so fuel costs, you pay GST, you can offset the taxes or the GST collected with the GST paid, and then you just either pay the difference if you have an owing balance at the end of the day, or you can collect a refund from the government. So that's how that sort of works. For payroll, it's a little, once you do register for payroll, it's really important that you're making what's called remittances to the government. And what the remittances are is on the gross earnings. You probably, when you get wages from your employer, you'll notice that the taxes, the CPP, the Canada pension amount, and then employment income is always deducted from your pay. So you get a net amount. So that amount of withholdings by the company is actually remitted to the government. And it's really important that those remittances are paid on time, because there's the late filing penalties could be significant. So you want to be sure you get put onto like a payroll schedule if that's the way you want to go. And of course, if you're incorporated, you'll have a business number as well. And then in terms of what should my business structure be, in this case, sort of alluding to what Kyle's already mentioned, is a sole proprietor, meaning you're going to be running your business as an individual and just reporting your income on your personal tax return on that business schedule. Or do you need to incorporate, which is the other most commonly used business structure? So it would be an incorporated entity with LTD or Inc. at the end of the name. And then the other common, like not so common structures would be joint ventures and partnerships, that sort of thing. And then another thing to consider is, when should I get my banking set up? When do you go talk to your bank to get your bank account set up? So if you're incorporated, you have to have all those documents in place before the bank will even open up an account under the company's name. So you sort of have to do that beforehand. And then as an individual, we usually recommend you get that set up, a separate account for all of your business earnings and costs, just to make the record keeping a little more straightforward, which is something Kyle will speak to later in our presentation.
Totally. Yeah. Thanks, Nav. And before we move on, I just want to make one quick comment on the GST. This is something that we do see clients that come to us often miss. And you want to make sure that you're collecting it, because if down the road CRA reviews it, you should have been collecting it. Oftentimes it's the business owner that's going to be on the hook. It's hard to go back to a client and say, hey, you owe me 5% for this GST that I should have collected 2 years ago. So just make sure you have that topic front of mind when you are starting your business and you're talking with your professional about those requirements. All right, so next we've got the common business structures. I know Nav touched on it, and I'll touch on them again briefly, high level here. But as we talked about the sole proprietor, so that would be when you reported on your T1 personal tax return. So you and the business are one and the same. This one, it's very simple. It's low cost. If the business doesn't work out, it's easy to wind up. It's a great place to start. The other option, which again does have some significant advantages, would be a corporate structure or a corporation. So this, you could see LTD, Inc., or Corp in the name. All means the same for tax purposes. It's a corporation, but this does offer you some creditor protection, and it offers us as tax professionals some really good tax planning opportunities. So we will get into more detail on the corporate structure, and then partnership or joint venture. To be honest, I'd say 95% of our clients would be one of the first two, sole proprietor or corporate, but there are some instances where these other structures might make sense. There are different tax filing obligations for both partnerships and joint ventures. Partnerships do have a T5013 partnership return that is required to be filed. So that's another good thing to keep in mind. But as we said, talk to your tax professional about what structure is best for your business.
When should I incorporate? Again, this gets asked often. And some of the things that would help you answer that question is to sort of understand the differences between being a proprietor versus being a corporation. So a corporation is not a separate legal entity. Since you are reporting all of your business earnings on your personal tax return, you essentially are your business, regardless of what your operating name may be. Your tax filing obligation is on a calendar year basis, meaning your earnings are reported on a January 1st to December 31st basis, and you don't get to determine that. And again, the biggest thing with proprietors is you're taxed at the marginal income tax rate, as Kyle previously showed, and the highest rate in BC being 53.5% for any net earnings over $227,000. And And for a corporation, it's a separate legal entity, so it stands on its own. The taxation years on what's called a fiscal year basis. So as a shareholder, you're able to determine what your corporate year end should be, whether it be June 30th, meaning that you report income from August 1st to June 30th of the following year, or if you want to keep a calendar year, that's really your decision. And the small business rate, you get, so one of the benefits of having a corporation, which is technically called a CCPC, a Canadian Controlled Private Corporation, is you get to benefit from this small business taxation rate of 11%. And how that works is it's just a flat rate. It's not like personal marginal tax rates where you're taxed within various buckets of income. Any net earnings of up to $500,000 are taxed at 11% flat, and anything over and above of active earnings is taxed at 27% in BC.
Which is still a lot lower than 53.5.
That's right. Yeah. So there are some advantages and disadvantages to incorporating. The biggest advantage being the tax deferral, as I'll illustrate in a slide after this as well. So basically what that means is you have more after-tax dollars available in your company for investing in the corporate needs. And you're able to income split within a corporation after the age of 65, meaning if you have a spouse who's not an active shareholder, but is a shareholder when you initially register the company, you can income split with them after that age, but prior to that, you can't, unless if they're actively working in the business. Some disadvantages is there's obviously going to be increased legal and accounting sort of fees, the annual compliance work with accounting, and then the annual legal fees to keep the company filed and active with the government. There's increased paperwork, administrative work, and then there's also some planning work required as well. So it's just more time.
Right. And so under the corporate structure, you have to file the T2 corporate return as well as still filing your T1 personal tax return. So if you incorporate, it doesn't get rid of that T1 filing obligation. You've got to do both. So it's an additional filing.
Yeah, thanks. So this is to sort of illustrate the benefits of incorporating when it comes to tax deferral. So on that first column, you'll see if you're an unincorporated individual and you earn $250,000 of cash and your after-tax cash requirement per month is $10,000. So in the unincorporated scenario, you'll see you earn the $250,000, you pay the marginal tax rate calculated as about $94,000 there, and the after-tax cash available to you is $155,000. You take out your personal tax or your cash requirement, and you're left with a savings of $35,000 in your bank account. However, if you incorporate, so you'll notice there's two columns there. One is the actual for the corporation. So the company earns the $250,000, pays the 11% tax at $27,000. The company has $222,000 and change left over. Because your personal tax requirement is $120,000 in this scenario, we assume we pay a dividend out. So it would be $157,000, and then the company is left with that $65,500 of excess cash or savings that now can be reinvested into the company. And then, as Kyle mentioned, in a corporate structure, you have the company's taxes due and now your personal, because you pull that $157,000 dividend out of the company. You have to report that on your personal tax return, pay the personal tax on that, and then you're left with that $120,000 of after-tax cash. So if you compare the two scenarios, you see the benefits of incorporating in this case, where you do end up with more money to reinvest in the company structure.
Totally. Thank you, Nav.
Yeah. And then the other thing you need to consider is timing. Do you have a business plan in place that actually is a viable structure? So does it make sense for you to incorporate right away? You say you have this new business idea. You would want to make sure that the business structure and concept is viable and it makes sense and there would be positive earnings from it. You also want to review your personal debt situation. If we were to look back to say 2020, when the cost of borrowing was about 2%, it would make sense to sort of spread paying off your debt over a period of time. And because it would make sense to pull out all the money from the company, pay the corporate and personal tax to just pay down personal debt. But now the cost of borrowing being a lot higher, that it may make sense to pull out more money up front, or even defer incorporating until you pay down that debt to a point where you're comfortable. And you also want to look at how much money will the company actually generate. Does it make sense to incorporate and incur all those added costs? Or does it just make sense if you're earning a less to be paying taxes personally because you're not above that 227 mark yet? Depends on your lifestyle. Do you like to save? Do you want to buy a house, buy a car, that sort of thing? That also plays into the timing of whether to incorporate or not. And future plans, again, are you looking to buy a house? Are you looking to have children? Do you need to save for them? And one thing to sort of note is, as a business owner, it's always important to keep in mind that you are, you're planning for retirement sort of right away. You're not going to have a company pension that you can fall back on when you do retire. So it's always important to consider, to have that in the back of your minds and to plan for retirement, whether it be 10 years down the road, 20 years, 30 years.
Totally. CPP will not be enough alone.
No. And then a general rule of thumb is just when your living needs are less than your corporate earnings. So if your company is making $1,500,000 in excess earnings and you only need that 10,000 of after-tax dollars to live, it makes sense to incorporate so you can keep that other money tax sheltered, sort of at the lower rates within the company.
Totally. And that's where we come into play, where we structure paying that money out over a period of time so that we can do it in the most tax efficient manner possible. That's really our goal. All right. I know we're running a little bit over, so apologies. We just love talking about this stuff, so we'll try to be prompt on our last couple here. So record keeping is one that we often get questions about, and something that people can regularly neglect when they're starting a business. I will say, as seeing people that come in that maybe are behind 3 years on their tax returns, I can't say enough how important it is to start this right from the get-go. As someone that specializes in accounting and tax, oftentimes where we add the most value is from that tax planning perspective. So, the cleaner that you can provide records to your accountant, the lower that bill will be at the end. Sometimes people provide very messy records, and it's a lot of time on us to kind of go through it, make sure things are recorded correctly and up to date. That's why oftentimes what we will recommend is, if you have a decent volume of transactions in your company, and maybe you have reporting requirements. Nav talked about GST, that could be due on a monthly, quarterly basis, whereas the corporate tax return might only be done on an annual basis. It's really important to reach out to a bookkeeper. And even if the cost upfront to work with a really good bookkeeper is more, in the long run, it'll cost you even more money if you don't do it right, and then someone has to come in and clean it up after the fact. So we definitely want to make sure that you're working with a strong bookkeeper. That's a really good place to start. And oftentimes we have really good working relationships with the bookkeepers that we work with our clients. In terms of types of records that you want to keep, essentially anything that's being reported in the business, you'd want to have a record of that, so that if CRA ever challenged it, you can provide it. So that would be invoices for sales, receipts for any expenses incurred, tax slips if you've earned income and there's a tax slip that you received for it, or donations, etc. How long should I keep records for? So this one, the important thing to note here is it's based off of the date that you filed it, not necessarily the year-end date. So for example, if you're someone that's filed 2015 in 2022, the amount of time you have to keep your records would be from the date that you filed it, not the year-end date. So we always recommend 7 years as like a rule of thumb you want to keep your records for before destroying. And it would be from that year of when you filed it.
And just to quickly add about records, any sort of capital transaction you get into, say you're buying a house or an investment property, you do not want to get rid of those records. You always want to make sure you maintain those records.
It's a great point because we usually ask for them if you ever sell the property. So,
Yeah.
So keep them. Thanks, Nav.
Yeah, no problem. And lastly, we just want to sort of touch on surrounding yourself with a professionals group as you grow your business. You're going to be in constant communication with obviously your accountant, your bookkeeper, but you're also going to be connecting with a lawyer when you're incorporating or when you're entering into new employment contracts or complex transactions where you might need an agreement. So a lawyer, so you want to connect with to mitigate your risks, to manage any sort of like liability insurance. You want to make sure you also have an insurance advisor that you connect with, a banker. So to set up your bank accounts to ensure your cash is being handled properly and it's all separated from your personal cash. So it just makes record keeping a lot cleaner there. And an investment advisor. Hopefully as the business grows, you have more savings and you're looking to, again, save for retirement. You want to be in touch with an investment advisor you could trust to sort of invest your money and see it grow down the road. And again, we work with all these professionals sometimes on a daily basis. If you ever need a referral or someone you might have questions about, you can always reach out to us and we're happy to refer any one of these professionals your way.
Totally. And I think it is very important to establish these upfront, these relationships, because oftentimes when you need a lawyer or you need an investment advisor, it's a lot harder to kind of scramble to find somebody at the last minute, as opposed to having that established relationship where the individual knows you and your business. It just makes it a lot easier to establish those upfront. We probably should have added V2F to this circle because there's a great community there where you might be able to get connections for these specific professionals that you could utilize on your team. So I think we're at our questions point. We were a little bit over, but thank you everyone for bearing with us. And if there is any questions, feel free to come off mute or put it in the chat, whichever you feel comfortable with. And you can also, if you do have questions that you don't want to mention online, we do have our contact info here. So feel free to reach out to either Nav or myself. Again, a lot of times with potential clients, we just kind of have a complimentary consultation call just to kind of understand their situations and talk about how we could potentially help. There's no obligation with a call like that. So feel free to take down our info if you wanted to connect with us after, and we're happy to chat.
Hi, thanks for addressing. Hi, Navdeep. Hi, Gail. Thank you for
Hello.
taking some time off and sharing his knowledge with us. I had a basic question. What's a common difficulty or question that you have guys seen with the new business owners that just started, in terms of it could be taxation or it could be like finding out clients or sales, or like, is there anything in common that you've seen in all the business owners that just started and then it's a client of yours?
Common difficulty?
I would
common
say
struggles that you've seen in your clients that are just brand new,
Okay.
maybe the new startup companies or anything like that. That could be useful for somebody who want to pursue a business in the future, so that they can keep that in mind. Or anything you would recommend that, you've seen this particular thing in new business owners that they keep on doing.
Yeah.
And then you try to suggest that to all the new business owners.
Right. Kyle, did you want to?
Sure.
I have an answer response as well, but you can go first.
Oh, it doesn't matter. Whoever. I mean, I have a couple.
Right.
I would say that the first one, kind of what we talked about, and making sure. So one, that you get things set up properly in an organized fashion. I know Winnie had mentioned that she works with us, but being partnered with a really good bookkeeper is huge for us. So NextGen is someone we work with quite a bit. That is a great way to start. And again, it might be a little bit more cost up front, but it'll save you in the long run.
Right.
The next one is with structure. I have seen a lot of people where they have this new business idea. They're very excited about it. They set up their company, and then maybe 6 months down the road, it's not really working out, but now you have this separate legal entity that's created. And now the question is, okay, well, how do I make it go away? And so it's not just straightforward as, okay, I'm just going to ignore it. It's still there. So I think, we kind of talked about making sure that you have a proof of concept. Nav talked about making sure that the business is earning more than what you need to take out on a day-to-day basis before you get a corporate structure in place. Like, I think those are important things to kind of consider. Like, start slow, make sure things are going to work out as you're kind of envisioning before getting too gung-ho and creating a complex structure that's harder to make go away if it doesn't work out.
Right. No, yeah, that's great. I think what you meant with going with experienced accounting is just because if the new business owner try to save some money for maybe going for their trying to bookkeeping themselves or trying to go for a lower rate, down the road in 6-7 years, they might face a bigger loss than they have saved in the future in the first place. So yeah,
Right.
that makes sense. Thank you.
Yeah. And I just to add there, Diljo, is a lot of times when people get into business, they need to put together sort of a business plan. Like, how do you anticipate generating these revenues?
Right.
How are you going to market yourself? Is
Yeah.
it going to be on social media? Is it going to be by word of mouth? Who
Right.
are you going to connect with? So, and you have to be realistic. You can't, some people come out with like these big dreams of like, I'm going to make this much this month, but how are you really going to generate those revenues?
Right.
And what are your realistic costs associated? So really sitting down and putting together sort of a cash flow analysis or like a budget is really important. And just really looking at the details of how are you going to market yourself? How are you going to differentiate yourself? So those are really important things to kind of consider when getting into business as well.
Right. No, that's great. Navdeep, is there any ratio that you would recommend? Let's say if you get $100 in, that they should have not expense over $90 or $80. Like, is there anything that you have in mind that you think is good for business owners to have a budget in mind, so then they can manage it accordingly in the first few years?
Yeah. Well, this could be a bit of a loaded sort of answer and question,
Right.
but you always want to look at your cost as direct costs, so costs directly associated with the earnings, and then your overhead costs, so costs that you're going to incur regardless of whether you're bringing in or generating that revenue. So an example of overhead costs would be, say you're renting a space.
Right.
Doesn't matter if you're generating the revenue, those costs are you're going to incur. So what you're looking at, depending on the type of business you're getting into, is your gross profit, your gross margin, which is your sales less your direct costs. And that gross margin, the bigger you can get that gross margin. If you have a gross margin of say 40%, that's amazing.
Right.
And then your overhead costs sort of stay stagnant year to year. And then you can sort of estimate as to what your bottom line would be. It's hard to kind of have that conversation without knowing the industry you're in.
Yeah, industry margin would vary accordingly. Yeah. No, that's great. Thank you, Navdeep and Kale.
Yeah, no problem. And just to add, Nav, I think that's a great point. A lot of business owners, they really chase that top line number. So they look at what their total sales are and they neglect, as Nav, mentioned, kind of that gross margin or bottom line. And oftentimes, you could be a lot less profitable at the end of the day and get less money after tax and expenses if you are just simply trying to grow that, gross revenue number as opposed to focusing on the gross margin as a whole. So yeah, no, that's a great point, Nav.
Thank you.
No problem.
That's the experience I believe we all experience. So many years ago, many clients asked me, said, why should it be incorporated? At that time, I said you have to earn at least a 6-figure before you're thinking about incorporate. And also you're not taking every dollar from your company for your personal life. Otherwise, it doesn't make any sense to incorporate. And another thing, I can add on a short example. If you open before I had a small client, just have a small, like a takeout restaurant, and how they're managing their money, they're thinking, okay, I have the top line bringing, and I'm going to control my raw material within 30% of my, money I collected from my customer, and then control another 30% for my overhead. And then I can have around the 30% as my total margin. I said, that's a great way you're thinking. So this is the business owners. Normally, I think professionals always try to advise them to thinking about what is your direct cost and then what is your overhead and how much money in the end. The
Totally.
top line is most important. It's the
Yes.
bottom line.
The bottom line.
Totally. Great point, Winnie. Thank you for sharing.
The bottom line. So any other questions? If there's no questions, I'll let Kyle and Nav go back to their busy working life, or maybe have a 10 minutes lunch. Thank you guys very much.
Our pleasure.
Whole team appreciate.
Our pleasure as well. Thank you so much, Winnie, and thank you everyone again.
Yep. Thank you.